The first set of tax cuts, many economists predicted, would lead to negative impacts on the housing market, prices and sales. That's not been the case. It's another sign that the housing market has come a long way from the financial crisis and housing crash a decade ago. Joining us now as part of our special look at the 10-year anniversary of the financial crisis and a CNBC exclusive is Franklin Raines, who was chairman and CEO of Fannie Mae from 1999 to 2004. Franklin, very good afternoon to you. Thank you for joining us.
Thank you.
What role do you think Fannie and Freddie played in the financial crisis erupting?
Well, I think Fannie Mae played a constructive role for the first part of the period. When I left in 2004, we saw the early signs that led to the financial crisis, particularly in the mortgage market, as interest rates were not appropriate for the risks that were being taken, and all kinds of consumer unfriendly products were being put onto the marketplace. And let me give you an example. In Las Vegas in 2004, 30% of all the mortgages were made to investors, not to homeowners, but to people who were investing or speculating in housing. And then when they inevitably would go away, you would see a crash. And that's what we ultimately saw much later on. Fannie Mae maintained its discipline really right up until 2007, 3 years or so after I was gone, but then lost its discipline along with everyone else. And so it joined Wall Street in what ended up being a terrible event for our country and around the world.
Do you not think that the seeds were sown before just 2007?
Well, the seeds of the crisis really came out of the subprime business that had gone through several crises before. They'd already collapsed twice before the financial crisis. But when that was matched with Wall Street private issuance of private mortgage-backed securities, that turbocharged these bad products and spread them around the world. And so that was really the big change, was when Wall Street really took over the mortgage-backed securities business from Fannie and Freddie, largely in that 2004, 5, and 6 period, that changed everything and created a momentum that just sucked along a lot of investors, including Fannie and Freddie.
Franklin, just to dig into that a little bit more, I mean, there's this Times article. It says 25 people to blame for the financial crisis. Your name, for example, is on it. I know there have been critics of you, given the fact that you are the former CEO of Fannie Mae. What would you say to them all this time later, and given the argument you're making right now?
Well, what I would say is quite simply that I think we were on the right path in 2004. We had already put restrictions on subprime securities. Fannie Mae lost half of its market share in mortgage-backed securities in 2004. And we didn't blink. We didn't say, oh, this is horrible, let's go out and change all of our standards to gain back our market share. Very few other companies would have the discipline to give up 50% of their business because they thought these were bad mortgages for consumers and bad mortgages for Fannie Mae. So I think the record's pretty clear. There's been obviously a big debate as people try to identify the responsibility. But we have seen these financial crises over and over again, and they're driven time and time again by the same things. A focus on how do I get higher yields, a focus on how do I get a greater margin, products that can produce a greater margin, a focus on growth and a focus on market share. If you apply that to the Latin America crisis, to subprime bonds, and to mortgages, we've seen this before, and unfortunately, I think we'll see it again.
Franklin, what's your view on how Fannie Mae and Freddie Mac are now organized, right? I mean, in government receivership all those years ago, still kind of in this limbo state. Some people think they should be kind of, wound down. Some that they should be liberated out as independent businesses, but that would take an enormous amount of capital. What should we do about those agencies?
Well, I think ultimately they need to be set back and into the hands of their shareholders with the appropriate capital requirements and allowed to function. I mean, they are still the backbone of our housing system. They are still operating and very profitably. They never had a cash flow deficit in any year. So I think at some point we'll get past the politics and get to the practical and say these institutions are here to stay in one form or another. Let's recapitalize them at the appropriate risk-based level and have them continue to serve the public service role that they had, perhaps without the large on-balance sheet mortgages. But the guarantee business is the heart of what the service they provide to the American homeowner.
Frank, I want to go back to the control that you said you were imposing on Fannie's activities in 2004 when you were still CEO. Had you remained as CEO through to 2007-8, would Fannie have remained in private hands throughout? Or are you saying that its part in the crisis would have been avoided if you'd remained as the CEO?
Well, you know, everyone can write their own version of the future. All I can say is this, is that the management that was involved in 2004 had the discipline and had the experience. I mean, we'd been through cycles before, and I think would have had the discipline to maintain that. I mean, Fannie previously had been the hero in multiple housing crises, including when the S&Ls imploded. Fannie and Freddie were the ones who stepped in, and there was hardly a blip impact on consumers as a result of that implosion. So I believe that we would have maintained discipline, and I think that Fannie would have then been one of the stars of the solution of the financial crisis rather than a cause of the financial crisis. But you know, take that for what it's worth. It can sound very self-serving. But there is a value in having people in leadership positions who've been through the wars before.